Hello guys, you are welcome once again to this channel, and in this video I'm basically going to show you the different entry triggers I use, which is basically the candlesticks I use to confirm my entry. If you're a price action trader, you don't just enter a buy when you notice the market is in an uptrend, or look for sell when the market is in a downtrend, or try to stay out of the market when the market is in a range. All right, but what do you do as a price action trader? One thing you have to know is that even if the price gets to my area of value or my point of interest, which is basically the place I'm looking for a buying or selling opportunity, I do not just press the buy or sell button upon the price reaching that particular zone or area. All right, there are certain few things I look for to confirm my trade before I enter. All right, before I enter, I make sure I confirm my trade. All right, so basically, I'm going to show you my candlestick entry triggers. There are few candlesticks I use when I'm looking for a buy opportunity, and there are few, candlesticks I use when I'm looking for selling opportunity. So in this video, I'm going to show you about 6 different candles that give me entry into buying or selling. All right. But then if you are new to this channel, I want to encourage you to subscribe to this channel. On this channel, we will teach you how to trade the market and become a consistently profitable trader. All right. Everyone wants to become profitable in the market. No one just wants to be in the learning zone for a long time. But it takes learning to become profitable. All right. So if you're interested in becoming a consistently profitable trader, all right, then you would have to subscribe to this channel. All right. So let's take this channel to 1,000 subscribers. All right. And if you're a returning subscriber, I want to thank you for being part of this family. Thank you very much. Let's get into the video now. So now, in price action, I've thought that the first thing you look out for is what we call the market structure. All right. The market structure is the first thing you look out for. And that one, what we are looking for is the direction of the market. All right. The direction or trend of the market. All right. Yeah. So in that one, we expect either an uptrend. All right, when it's in an uptrend, look for buy opportunities, or we expect a downtrend. All right, where in a downtrend, we look for sell opportunities. Then when the market is in a range, all right, when the market is, for instance, in a range, or what other people call consolidation, all right, or accumulation. People literally have the same ideas, but just that it has different wordings or phrases. So it's either a range, consolidation, or accumulation. What do? You look to either stay out of the market, all right, or look for other opportunities. Look for opportunities in other markets. All right, other opportunities. All right, so that's the first thing you look out for to see whether the market is in an uptrend or a downtrend. All right, then the second thing you do is to look out for now, if the market is in an uptrend, if you are going to go in the path of least resistance, right, then if the market is in an uptrend, you look for buying opportunities. But if you are looking for a counter trade, then if the market is in an uptrend and you want to go against the trend, upon confirmation, you can go for sell. But I do not like to trade in the path of least resistance. So when the market is in an uptrend, I only look for buying opportunities. Then when the market is in a downtrend, I only look for selling opportunities. All right. Anytime I notice the market is consolidating, I try to stay out of the market. So basically, let me just give you a recap of what I'm talking about. Imagine, assuming that you see the price go up, retraces, breaks this high, retraces again, breaks this high. Sometimes it can be like this, then it breaks this high again. All right, comes here, then it goes this. All right, so for instance, you see a market like this, you can see that this point is called a higher high, right? We have a new higher high here, a new higher high at this point, a higher high at this point. All right, then we see a higher low, all right, at this point. Then we will see another higher high at this point, all right. When the price broke this particular structure, all right, let's see this structure. Sorry, guys. Let's see this structure. You see this particular high here, all right. And the price came and it broke this particular structure. we form a new higher high. Then the price retraces and retests this particular high at this point. Then when resistance zone, the higher high is broken, all right, and then it's retested again, then that higher high, previous higher high, now becomes a higher low. All right, so this point now becomes a new higher low. All right, so in an uptrend, you will see series of higher high, higher low, higher high, higher low, equal highs, equal lows. It breaks this structure again. All right, this structure is broken again. Then you have a new higher high, retest at this point, higher low. All right, because this low here, all right, this low here is higher than this low. All right, that's why you come with the term higher low. And let's see this higher high. This is a high, this is a high, but this high here is higher than the previous high. Do you get it? So this is basically how an uptrend looks like. So if you can see the overall trend of the market, all right, is to the upside. All right, can you see that? It's to the upside. So we can say the market is in an uptrend. So in an uptrend like that, what we are looking for is buying opportunities at the area of value, which I will take you through very soon. Then when the market is seen in something like this, price comes down, retest at this point, breaks the structure, comes down, retest at this point, breaks the structure again, comes down here, breaks the structure again. All right, the price can even come all the way here. All right, try to form consolidation, then comes back down again. All right, so in cases like this, then the market is in an uptrend. I believe you can see it's coming down. Are you seeing that? Yeah, so what do you see now? You see the price comes down, retest, all right, comes down and breaks. The price breaks this particular sorry guys, the price breaks this particular low here and forms a new lower low. Then the price pushes back to retest this particular low here, right? Then you have a higher low, a lower high, sorry. Then you have it breaks this structure, this lower low, then you form a new lower low, comes back again. This high is lower than this previous high, right? So you have a new lower high, all right? So in a downtrend, you have a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then the trend is going downwards. I hope you get that. Then sometimes you see the price forming a series of highs and lows within a particular range or zone, something like this. All right, it doesn't break all the structure retest. So something like this, you see. So it is formed between these highs, all right, and these lows. Then you can see the market is in a range consolidation or accumulation state. In this kind of market, I don't look for buying or selling opportunity. I just simply try to stay out of the market, except you are looking, you want to just, take the trade, right? But in a range, I try to stay out of the market. So this is basically what we call the market structure. Then the second thing you look for in a price action trading or technical analysis is the area of value. Is your area of value, and I wouldn't spend a lot of time. And here we are looking at support and resistance. If you've been following this channel, we use support and resistance. Other people are known for using the EMA, all right, exponential moving average. People use the trend lines, all right, to confirm the areas of value. But I use support and resistance as my areas of value, all right, basically. Then when the price now comes to the area of value, that is where our entry trigger comes in. That's basically the focus of this particular video or tutorial session. So I like to use candlesticks as my confirmations. All right, my candlesticks as my confirmation, and there are few candlesticks I use. All right, so first of all, let's look at some different candlesticks I use. All right, so I'm going to show you first my buying bias candles. All right, buying bias candle. But before then, I want to show you generally what a candlestick looks like. Imagine you have something like this. All right, you might have something like this. Let me see something like this. All right, let me change the colors. Let me change the color to green. All right, then the text to green. This one is also green. I think it's okay, right? Yeah, then you would let's say you have a line. Sorry guys. move it to this point. Interesting. I think I should do another one. Trying to just draw a candlestick. Oh, come on. Sorry, guys. Sorry, guys. Um, I'm online. I'm using the online version of TradingView. That's why they are giving me an advert, and I get it. They should also market themselves. All right. So we have let's. Oh, come on. Why is this trend line being drawn at a different side? Let me just try to. Good, good. Yeah. So you have something like this, right? So let's say you have another line right above this point, all right? So something like this. This is how a candlestick looks like most of the time. All right, so this particular one part, the green part is called the body of the candlestick, all right? This particular part is called the body. All right, that's the body. And the lines here, this particular line, all right, is called a wick. A wick, all right, which shows you the rejection wick, and it's really, really important in deciding in the market. So you need to understand that, all right? So that is called a wick. This particular part is called a wick, all right? That small line over there is called a wick, all right? Then this, in a green candle like this is the open price below here, all right? Just before the wick, all right? The body, all right? It's called the opening price. Does it make sense? So this part, this particular part is called the opening price. All right. That's the opening price. All right. Then the top of the body. All right. The top of the body, like you see this particular top here, is called the closing price. Closing price. That's the closing price. Yeah, that's the closing price you see here. Then push the wick up a bit. So this is how a candle is labeled, all right? Then the highest point here is called the highest price, all right? Yeah, and this is the lowest price. You see the closing part. So in a bullish, or yes, in a bullish candle, you see the opening price is below the closing price, all right? The closing price is greater than the opening price. Does it make sense? In a bullish candle, you see that the closing price, all right, is greater than the opening price. Hope it makes sense. You can see, because if you are seeing in an uptrend, you expect the price to go up, all right? And if this is the candle and this is the opening price, then definitely this part is higher than or greater than this point. So the opening price is smaller or lesser than the closing price. Doesn't make sense. Let me put it well. The closing price in a bullish candle is greater than the opening price. Doesn't make sense. Believe it makes sense, right? Then let's see how a bearish candle looks like. So just using similar candle, let me just use this candle. So what I've drawn now is the body of the candle. Let me fill it red because that's how normally a bearish candle looks like on a default trading view, or I mean any platform at all you are using, whether MT5, MT4, trading view, match trader, C trader, all these trading platforms, automatically or by default, the bearish candles are red and the bullish candles are green. All right, so yes, similar to this particular candle, or I should use this now. Let me just do one here so that it will be different from this. Let's see. Just want it to be in the middle. It's not easy actually, but let's see. I'll just have to maybe probably expand this part, this big part as well. I'll take you to the chart to see actual candle. So this is just me trying to plot it for you to see. You see another wick here at this point, just like this one. All right, so this red part is the body, is still the body of the candle. All right, still the body of the candle. And as you know already, this is called a wick. Let me just copy and bring it to this point. This is a wick, all right? Let me copy again. This is also a wick. All right. Yeah. And this is the lowest price, and this is the highest price. Is that okay? Right. Yeah. The only difference between a bullish and a bearish candle is that the opening price, all right, the opening price of the bullish candle, all right, is below the closing price, which is the closing price is more than or greater than the opening price. But in a bearish candle, this point now becomes the opening price. Are you seeing that? The opening price. Just take note of the difference. And then this part, all right, now becomes the closing price. All right, now becomes the closing price over here. It now becomes the closing price over here. All right. Yeah, so you can see that if this is the opening price, is higher than the closing price. So the difference now is that in a bearish candle, opening price, all right, opening price now greater than closing price. Amazing. Hope you spot the difference, all right? Opening price for bearish candle is greater than the closing price. For bullish candle, the closing price is greater than the opening price, which I think it makes sense actually. It makes sense. That's basically the difference over here. All right. And that's the wick. And take note of the wick. Whenever you see a line, all right, a line below the body of a candle above the body is called a wick. And then the colored part of the candle is called the body. Then if it's a bearish candle, the opening price is high above, the closing price is below. If it's a bullish candle, the closing price is above and the opening price is below. This is basically what candlestick look like. I hope it makes sense. Basically what candlesticks looks like. So now let's get into the lessons for today, and I'll show you my candles. All right. So let's assume that we are looking for a buying opportunity, buying opportunity, buying opportunity. And these candles is not just, we don't make decisions with a candle alone. I'll first of all wait for the price. Let me just type it here. Price should come to, all right, price should come to the area of value, or what other people call the point of interest first, all right, before I confirm with the candle, with the candlestick. You get it? Before I will confirm with the candlestick. All right. So for some people, it's not as if the once you see the candlestick at anywhere at all, once you notice it is bullish candle, you just enter on a buy. That's the easiest way to blow your account. You get that? So let me just demonstrate something to you here. Let's assume that you have this price, comes down, up, comes down, up, comes down, up like this. What's the trend of the market? Just pause the video and see. What's the trend of the market? Uptrend. I hope you got it right. This is an uptrend. So in an uptrend, you have the area of value, which is a support zone. Because we are looking for buying opportunity, this will be an initial support zone. All right. Then another support zone at this particular point, you see. So now, what we will be looking for if the market is in an uptrend is to just wait for the price to come down. It will just, the market doesn't move in a straight line. Then it gets to this point, you get it. When it gets here and it's reversing, all right, because it's an uptrend, we know that at this particular point, it has tested here, tested here, tested here, and tested here. So tested multiple times, which is a good place to draw your support zone. All right, so what we'll be looking for is that this new thing that will be going up, it should form, a candlestick should form. One of the candlesticks we are going to learn, right, should form here at that area of value, at this area of value, which is a support zone, before we can confirm with the candlestick to go long. But let's say at this point here, at this point, it's not an area of value, but you spot let's say a bullish engulfing candle. I'm just giving you prior information. I'm going to teach you bullish engulfing candle. All right. You spot a bullish engulfing candle at this point, then you enter buy. You notice the price didn't go. All right. So we only use the candlesticks at the area of entries together with the areas of entries, all right, or the area of value or the point of interest to confirm our trees. I hope it makes sense. Yeah. So we don't just rely on candlesticks. We use it together with other tools to get profitable setup. So yeah, so first candle we want to look at, right? First bullish candle we want to look at is called the hammer. All right, hammer candlestick. All right, we are going to learn what we call the hammer candlestick, and it's very important. The hammer candlestick looks like this. Let me show you. You see candle form like this. All right, then is see a line, a long one like this. You see, because you are dealing with bullish candles, let me make sure this part is green. So this is how a hammer looks like. Can you just see it's like a hammer? All right, and sometimes the wick will not be that long. You see you have a green thing here like this, all right, and then you will now have a wick like this. Come on. Just draw that again. You will have the wick. Come on, come on, come on. Get it well. Interesting. Let me attempt for the last time. If I don't get it, you just focus on that one. Interesting. Let me just draw it here. I just have to expand this part, all right? Yeah, let's do something like this. This is also a big hammer. You get that? So this is how a hammer looks like. You see the body of, so this is the body of the candle, right? Then which side will be the opening price? Where's the opening price of this? Just pause the video and find out. Opening price. Okay, the opening price will be at this point. Opening price. All right. Then the closing price will be at the top of the body. Closing price. All right. Then this is the body. So where's the wick? This is the wick, a long wick. So you see the body with a long wick. I get in that. So this will be the wick. This part will be the wick. All right, that's the wick. And we use the wick to determine whether it's a hammer or another candle. So here, there's the body, opening price, closing price, a long wick over here. So what's the story? Now, the story was like this. When the market or the price started, right, sellers were in control. You get that? So sellers were just pushing the price down. There's a story behind that. Sellers were just pushing the price down, pushing the price down, pushing the price down. Then the buyers got some strength and came in and pushed the price all the way, right? All the way, all the way, all the way up. Then the price closed. It tells us that now the buyers are in control because when it started, the sellers were just pushing the price. Yeah, they have strength, they have strength, they have strength. Then the buyers just got supernatural strength, you get that. And then they just came in and began to defeat those who are selling and took the price and now brought it high to close at this point at the higher. So you see this rejection, it tells you that the sellers were in control initially, but the buyers came in and defeated them and took the price up. Are you seeing that? So now it tells you that the buyers are in control. That's why we can use that to confirm our buy entry. So if you find this particular candle as, let's say, a good support zone, all right, at a good support zone, all right, then we can now look for, after this candle close, you will now enter, all right, you will now enter. Let's assume this is our support zone here. You get it? Then this closed. So we will now enter high, buy on the new candle that will be opened at this point. At this particular point, we look for a buying opportunity, this particular point, all right, because you'll be expecting that the price, all right, would move up again, maybe retest, all right, and keep moving up. Are you seeing that? So this is what we call a hammer candlestick. This is a hammer candlestick, all right. I will show you the opposite in a selling condition. So let's just move on. Then we have another candle. So that's the story of a hammer. After this, we go back to the chart to apply to a real market condition. We have another candle called bullish engulfing candle. A bullish engulfing candle. All right, this is also another good confirmation you need to know. So with that one, you see a bullish engulfing. You see something like this. All right, a bullish engulfing candle over here, sometimes very big. All right, then the story is that before the bullish engulfing, you see successive candles over here. Let me change the color to, let's say, red. Just change the color to red. See candles here like this, all right? Forming here like this. Candles forming like this. Then you see a big green candle, right? That will now override all these candles. You see that this big green candle now came to overshadow all these red candles before. Are you getting that? Which tells us that, no, buyers are now in control. So we can just assume that this is our support zone. Get that? So now it tells us that buyers are currently in control and the price can actually be like this. You see, it's not always red like that. So let me just give you another green, something like this. You get that? We can have a green candle like this where we can put the wick at this point. You see, this how it sometimes the market will look like. You see, then it's coming, then a big green candle comes up like this. It tells us that now the buyers are currently in control. That's when the market is in an uptrend. You got that. So now we will just wait, and at this particular zone, right after this candle closes, all right, at this point, we look for a buying opportunity because we expect that since buyers in control, the price is supposed to keep moving upwards. Are you seeing that? So this is why we call a bullish engulfing candle. So now with the bullish engulfing candle, I can see you've been able to label already. Most of the time, the bullish engulfing candle will not have a wick. You see, the engulfing candle will not have a wick. Sorry, guys, will not have a wick. So, and sometimes it may have a wick. You can see another engulfing candle like this. And the fact is, you should see that it is bigger than the previous candle. It has like overshadowed the previous candles, right? Sometimes they have some wicks, all right? Sometimes they have a small wick at their down or at their bottom, or you get it. So because it overshadows the previous 2 or 3 candles and it's a green color, or that is a bullish candle, then we know we call it a bullish engulfing candle. All right. Then the next candle I want to show you in the bias, all right, in a bullish candle, I want to show you the third one, which I use, is called a morning star candle. All right, very, very easy. Morning star candle. The morning star candle, all right, the morning star candle is that you see, let's see, the candle, let's assume that this first candle is red, all right, then you would see, see, should be just a line like this for me. It should be black actually, but it's fine. Then you see something like this. Something like this, right? Yeah, it's actually a line, guys. So yeah, good, 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 good. Then you see another candle pop up. All right, you see another candle pop up, and that candle most likely will be green. And all this is happening at a good area of value. Let me just make it white, right? For you to see. Or now, let me just make it a different color. At least, yeah, I think this is okay. And let me just reduce the opacity. All right, yeah, you see this. So now you see a candle, all right? Then you see this kind of thing, right? Then it pushes up. The next thing that appears is a green candle. Then we are having what we call, and it's not most of the time bigger like this. Sometimes it can be like this. You see, once we see something like this, then we call it a morning star candle. It tells us that the sellers were in control at this particular point. Sellers are in control. Then at this point, this candle is called a doji, all right, where the body is small, but is so sometimes it can be like this. And let me make it just green. Can be like this. The body is small like this, but it's at the middle, telling us that both the buyers are and sellers are in control. Like there is a bit of indecision over there. They are all having equal strength, so anything can happen. You see that. So once you notice that, the next thing after this struggle over here with the doji candle, after this struggle, the next thing that comes up is a green candle. It tells you that okay, finally either the buyers have convinced the sellers that they should take over or they've defeated them. So now we can know that buying opportunity is ready to what? To step in. All right. Buying opportunity is ready to step in. So right from here, we can just, expect the price to go up. You see, the price to keep going up. And that's why we call a morning star candle. So just let me show you something. Assuming that it came down and we have this struggle here, then the next candle that form was something like this. You see, and actually it will be a red candle like this. What's your conviction? What do you think? I believe that the buyers or the sellers are currently going to be in control. So if this is a good resistance zone, I can just wait on the next candle open and go for a short opportunity if it aligns with my trading condition or trading strategy. All right, so that's basically what we call a morning star candle. Does it make sense? Let me just do a recap for you in on the bullish candles. So we have a hammer. All right, hammer is like this. It has a long wick which has been rejected. Initially, sellers were in control. Buyers came in and pushed the price up. So we can look to enter at a good area of value. All right, at a good area of value, we can look for entry on the next candle open like this. All right. Then we have a bullish engulfing candle where the previous candles, all right, the previous candle were a bit smaller, all right, the previous candles were a bit smaller than this particular new candle that was formed, all right, but then the new candle that came overshadowed or overrode all these previous candles. So you can see this is the bullish engulfing candle, all right, green light is very big, all right. Then we have the morning star candles, all right, which is where you have a selling pressure. The sellers are in control. There's a bit of struggle here. It's a tiebreaker. Then the next candle, sorry guys, the next candle that forms is a green candle, which tells us that currently the buyers are in control. We can look to expect that the price will push up. All right, so you position yourself to enter on a buy opportunity. All right, so yes, let's also look at the bearish candles, which is basically going to be bearish candlesticks. It's just the opposite of everything we've done on the bullish, so we take a lot of time. So the first candle we would want to treat is what we call a shooting star candle, and actually is the opposite. All right, is the opposite of what? The hammer. All right, is the opposite of the hammer. Shooting star candle is the opposite of a hammer. All right, so that one, since it's like the inverted side of, other people also call it inverted hammer, but it's easy to call it, well, I think inverted hammer, so it reminds you that it's the opposite of hammer, right? But you can also call it a shooting star candle. So you have a long wick coming down, just like the hammer, right? Then you would have a body at this point, you see, a body at this particular point, something like this. So this is how the shooting star candle looks like. So because it's a bearish candle now, where is the opening price? We know this is the wick, this is the highest price, and because there's no wick at the bottom, there's no wick over there, so you have the highest price, this is the wick, this is the body. Where is the opening price? This is the opening price. Have you seen that? This point is the opening price. All right, I told you in a bearish candle, the opening price is higher than the closing price. All right, then this is the closing price. Are you seeing that? And this will be the body. So this is how a hammer candle still looks like. What's the story behind it? When the market opened, buyers were in control. Sorry, let me use a good one. to demonstrate. Buyers were in control. So buyers were just pushing the price up. Then sellers got some strength and came in and they begin to defeat the buyers and they push the price down and close at this point. So at this point, we can say that, yeah, the sellers are currently in control over here. All right, so that's the story behind a shooting star. So at a good resistance zone, all right, at a good resistance zone, I can look for a selling opportunity right after this candle closes. The new candle that opens after this, I'll look for a selling opportunity. The next candle we look at, which is the opposite of the bullish engulfing, is what we call the bearish engulfing candle. Bearish engulfing candle. This is basically the opposite of the bullish engulfing candle. So anything you know about the engulfing candle, so successively, you will first see some candles forming, a new candle forming. So let's say this candle can be green. Are you seeing that? Then we see another candle form. All right. Actually, it can be red. Right, then a new candle also forms at the close. Okay, so first of all, I think I should teach you all. Hold on, guys. Hold on for me. Yeah. So because it's the closing price, this candle off to be here. Let's say closed at this point, right? It closed at this point. So the next candle will definitely form at this point. All right. Then we see a new candle coming at the close of this point, and it comes down big candle like that. You see, it comes to overshadow all these candles. All right. So you can see this is the bearish engulfing. It engulfs or covers, overshadows all these previous candles. So we can now see that selling pressure has begun to set in. All right. Selling pressure is high. So we will look for, if it's a good setup, you look for an entry at this point. At this point, that's the closing price, right? So the next candle that will form at this point, you see, I will just enter the trade at this particular point. So that's why we basically call a bearish engulfing candle. Then the last candle I want to talk to you about is what we call the opposite of the morning star, which is called the evening star candle. And see, guys, I'm teaching you this and I'm not looking at any notes. Why? Because the more you look at the market, automatically you have these pictures in your mind. You get that? So you don't need to cram it. Just practice and look at it, watch the video multiple times, and you are going to see that you have all these at the back of your mind. All right. Someone will say in your palm, you can carry it anywhere. All right. Yeah. So evening star candle is the opposite of the morning star candle, where you would see, let's say, a candle here form here. All right. Let's see the color of the candle. It was a green candle. All right. Then we would see an indecision candle form. So what we call doji will form at this point. Let me push it up a bit. All right. An indecision candle will form. And they are struggling. We don't know who is currently in control at this point, right? Let's see like this. All right. Then the next candle that comes is a big candle. It can be big, smaller, same size as the previous one, or it can be relatively bigger than this, and it's a red candle. You see like this. So, and let's assume this was a good resistance zone over here. All right, let's see, it was a good resistance zone at this one. Let me just change the color so that you can see. Yeah, something like this. So, because of the indecision, so buyers were in control at this point. There was a bit of a tiebreaker here, but then the next people that show strength was the sellers. So because of this, you now see that this is what a bearish candlestick pattern. All right, so now we look for a selling opportunity at the close at this particular point, and we look that the price will begin to keep coming down. So if I'm going to enter, then I'm going to say I'll enter at the close, the new candle that will be formed. That will be my entry point. So at this particular point will be my entry point. Set my stop loss, all right, above here, all right. At least your stop loss should be in the middle of the previous candle, green candle here, right? Then you can literally extend your take profit at this point. Then you can just wait and see if the price will play in your direction. You can just come here like this, begin to play with you a bit. You should understand that before the market doesn't move in a straight line before the price hits probably your take profit. All right. And it's not as if you always get profit. Um, sometimes actually the price can just come down, boom, you're happy, right? You'll be happy. And just clear this so that you see it clearly. The price can also, the market can just seek to take you out, all right? So you see the price now come down. Oh, come on, guys. I'm sorry, guys. Let me make sure I give you the best over here. The price comes down, reverses, comes down, reverses, reverses. See the price come down, play with you a bit, boom, then hit your stop loss. So losses are part of trading, all right? So you should be ready for that. Losses are part of trading, so be ready for that. So these are basically the candlesticks I use on any single trade I get. These are the candlesticks. So if I'm looking for, the market is in a downtrend, I'm looking for a selling opportunity, I look for either evening star candle, a bearish engulfing candle, or a shooting star candle. If the market is in an uptrend and I'm looking for buying opportunity, I look for a hammer, all right, or a bearish engulfing candle, or a morning star candle. These are what I use, all right. Then I'll now apply proper risk management to manage my trade, right? I believe you learned a lot in this. There are a lot of candlestick pattern, dragonfly, a lot of candlestick patterns out there, but you need to know the ones that work for you and keep it. So what I do is that anytime the price gets to my area of value and I don't find one, and these are the most predominant candlesticks, right? These are the candles that usually appear on the chart, all right? So I just wait. If I find one of them at a good area of value, I'll enter the trade and apply proper risk management. If I don't, I stay out of the market to protect my capital. So let's see if we can go back to the real chart to show you how these candlesticks looks like. So at this point, let's see, look at this point. Look at this point. Look at this particular point. This was a good area of value actually. See, the price tested this point, tested here. Here it acted as resistance, acted as support, support, support here. So you can see this is a good area of value. All right. This particular, let me make it a bit opaque. All right. So something like this. All right. Then at this point, we see the candles are black. I decided to change the color of the candle for just to control my emotions. By default, the ones coming down are red and this is green, but I just made the ones coming down black and the ones going up blue. You can also change it. All right. It helps me to control my emotions anytime I enter a trade. So if it works for you, can change. So right after this candle closed, all right, the next candle that came engulfed or covered two previous bearish candles. Can you see this particular blue candle here? All right, it tells you. So this particular candle is an example of what we call a bullish engulfing candle. All right, this is a bullish engulfing candle. So what did I tell you? Once you see a bullish engulfing candle, you will just enter on the next candle. So this trade, if you entered at this candle, then you would have won this trade at least up to this point. All right, so this is how the entry was going to be. You put your entry at this point, take profit around this particular high. All right, then you set your stop loss under here. Risk reward ratio is 1.42, which is you are risking $1 to make $1.42. All right. Yeah. So now the price would have gone to your direction. Have you seen that? The price would have just, worked for you, as you can see over there. So that's an example of a bullish engulfing candle. Let's go ahead and see if we can find other candles as well. See another example of bullish engulfing candle. See these previous candles, all bearish. But this big candle took or overrode all these candles, and what happened next is a buy. It went up. All right. Can you see that? Let me see if I can see. And let's see this particular side. Let's see this side. You see this particular side, this zone here. Have you seen? It's at an area of value. It is the support zone. So what happened? Let me just reduce the opacity a bit, right, so that I can see. You see this candle, the bearish one and the green one. What are they? Do you see that this is a hammer? Can you see? This is a hammer. All right, so if it's a hammer, I hope you can see. Let me zoom it. Hope you can see this is a hammer. Let me take this not to distract you. You see? Can you see that this is a hammer? Hammer. So I'll just enter on this candle. All right, and obviously my take profit will be, so if I enter here, take profit will somewhere be around this point. All right, the previous resistance here, then my stop loss will be somewhere here. So you see what happened. The price now pushed up your direction, try to reverse, but I did not hit your stop loss. All right, then the price rose again all to this point, then it hit your take profit. So yeah, that would have been a profitable trade. And not every time you get profitable trades, but upon what I'm seeing so far, that would have been profitable trades. Yeah. Let's see. See a typical example of a hammer. This is a typical example of a hammer. You came down, you see this, a long wick here, the body is here. And in fact, the hammer doesn't have to be like a green candle in case you are looking for a buying opportunity. It can actually be a red candle, but this I made the color black, right? It can be a red, but because it's at an area of value, a support zone. That's the most important thing because it formed at a support zone, all right? We can see that this is a good place to enter on a buy, and you would have entered by here, even though it wasn't a big profit. It came down back, but you will still be in the trade, then it will probably come and hit your take profit at this point. So that's an example of a hammer again. Trying to look for there's a hammer. Can you see that? There's a hammer candle. See. So you can see them. There's a hammer candle. Let me look at another chart here. Let's see if you find another opportunity here. Okay, I think that's it. You can just go through your chart, right, and see if you find these candlesticks I've shown you today. All right, so guys, I believe you learned a lot in this particular trading or training session. All right, if you whatever you learned, please drop a comment in the comment section. If you have questions, you can leave it in the comment section. All right, anything at all, I will try to respond to you as soon as possible. And I have my WhatsApp number or the WhatsApp group number in my bio or the description of this video. Kindly click on it and join the trading community. Let's go together as a family. All right. Thank you very much. Kindly subscribe to the channel and share this to your colleague traders who are, who have the dream of becoming profitable traders. And I'll see you in the next video. Bye bye.